Okay, we are waiting for new gross domestic product numbers to arrive. They have. The number is stronger than expected. The annual pace of gross domestic product growth in Canada in the month of January was 0.9%. So that's from January of 2023 to January of 2024. Gross domestic product grew by 0.9%. On a monthly basis, it's also stronger than expected. Economists had expected a monthly increase from December to January of 0.4%. The number being reported is 0.6%. And that is a stronger number than the monthly gain in December, which is now being restated down to a contraction of 0.1% in December on a monthly basis. Let's go, we will go before not long to our expert guest, Sal Guatieri. He's a top economist at BMO to talk about these numbers. In the meantime, here's some stories that we're tracking for you in the BNN Bloomberg newsroom. Shares of BRP Incorporated are under pressure in the pre-market. There's the stock down nearly 7%. This comes after the Quebec-based maker of snowmobiles and all-terrain vehicles reported disappointing quarterly results. Profit fell by nearly 50% as mild winter weather affected demand for its iconic Ski-Doo brand. The company is also forecasting a drop in full-year sales and profit. Hudbay Minerals has boosted its full-year copper production forecast. The Toronto-based miner now sees production rising to as much as 176,000 tons. Hudbay says operations are progressing well at its three main operations located in Peru and in Manitoba. Home Depot is making a big move to expand its professional services business. The retailer is buying SRS Distribution for a total enterprise value, which includes debt at SRS, of $18.25 billion US. SRS is a Texas-based company that sells supplies to professionals in the landscaping, swimming pool, and roofing businesses. It has a sales force of over 2,500 people at more than 760 branches across most of the United States. There are the U.S. futures. U.S. economic gross domestic product numbers have also just landed. I'm going to take a quick look at those. Those numbers are a bit stronger than expected, and they're also a third reading, so it's not completely fresh data. The annualized pace of gross domestic product growth in the fourth quarter, 3.4%. That's versus 3.2% as an expectation. Well, for more on the Canadian gross domestic product data, let's bring in Sal Guatieri. He's Director and Senior Economist at BMO Capital Markets. Sal, thank you, as always, for making time for us on a busy day. I'm sure for you, again, we'll tell viewers that the annualized pace of gross domestic product, the year-on-year growth was 0.9%, positive 0.9% in January. That's slightly stronger than the 0.8% that economists had forecast, according to Bloomberg News. And the monthly number, the growth in GDP from December to January, was also stronger than expected at 0.6%. That was versus the expectation of 0.4%. What are your initial thoughts, Sal?
Well, much better start to the year than anyone anticipated, and even stronger than Stats Canada initially thought, because they were calling for 0.4% growth in their flash estimate. So great start to the year. But in perspective, I mean, the economy grew almost as much at the start of this year as it did in the past year, only up 0.9% on the 12-month basis. So it's coming off a period of pronounced weakness in the Canadian economy. And most likely some of that bounce or rebound does reflect a rebound after the Quebec's public workers strike. So overall, though, it's a better than expected number. It does set the stage for a further strengthening in Canadian GDP in the first quarter. We were calling for a 1.5% annualized rate. Might need to bump that up a little bit. We grew 1% annualized in the fourth quarter. So the economy does look like it's gained a little momentum. And if that's the case, it's largely because of the so-called threes, population growth and U.S. economic growth. Pretty tough for your economy not to grow, even at a decent rate, when the population is growing the fastest in over 6 decades at upwards of a 3% rate. And we know U.S. economy, as we saw in the fourth quarter now with these final Q4 estimates actually revised up, the U.S. economy grew more than 3% in the past year, more than 3% annualized in the fourth quarter. So that's giving a nice boost to Canadian exports. No surprise that Canadian exports are leading economic growth in the past year. They're up almost 6% through last year to the fourth quarter. So that explains most of the growth in Canada's economy, which is up about 1% in the past year. Now, mind you, the U.S. economy is still growing about 3 times faster than Canada's economy, simply because American consumers are spending at about 3 times faster than Canadian consumers, around 3% in the past year, compared to Canadian consumers about 1%.
And I can tell viewers, and perhaps you as well, Sal, that the so-called flash estimate this morning from StatsCan, which is the most forward-looking number, it's a February number, so it refers to the past, but this, of course, is a preliminary, subject to revision number. 0.4% is the GDP growth that StatsCan sees in February on a preliminary basis. And again, that number could well be revised up or down when we get a more complete picture of February GDP from StatsCan in about a month's time. Greg Newman has a question. Greg?
Yeah, so what, if anything, does this do to change the outlook of the Bank of Canada, this, slightly more robust number in Canada, and, frankly, this really, more impressive growth in the U.S.?
Yeah, I think for the Bank of Canada, it's saying that because the U.S. economy remains so resilient, in some cases might even be strengthening, that's providing a solid backbone to Canadian exports and underpinning our economic expansion. So we do see some rebound in consumer spending and maybe hopefully business investment, which has actually been shrinking for the past year. That could lead to much stronger economic growth this year. For the Bank of Canada, that would be another reason to remain very patient before cutting interest rates. So we're still looking for the bank to begin cutting interest rates in June of this year, and they could cut rates by a full 100 basis points later this year. But the risk probably on the side of a delay if we continue to see better economic data out of Canada and out of the U.S.
You said in a note previewing these numbers, Sal, quote, "We'll be watching the February flash estimate for an indication of how much momentum carried over into February from January." So again, that number is growth of 0.4% in February. What do you think of that number?
Again, that is better than I believe anyone would have anticipated for the flash estimate. Now, mind you, the month was relatively warm, and people were out probably shopping because of that. So that an artificial boost there. But these are back-to-back solid months, and a solid start to this year. So clearly, people will be revising up their estimates of Canadian economic growth in the first quarter. Could be in the 2% range annualized, so almost double the pace of the previous quarter, and one of the strongest quarters in a while now for Canada's economy. So very good news, clearly, for the economy.